getting ready to share your assignment. First, can you just get us started on what is your focus today? What was the homework that you did?
Yeah, the focus today was drawing my fibs and finding entry points using the combination of methods we've learned through our toolkit, including signals like engulfment and hammers and railroad tracks and consolidation. So overlaying my fib and finding sweet spots and then using those signals to see where I would potentially enter.
Fantastic.
But one interesting thing is, I'm going to try to open NVIDIA again. I'm seeing some missing drawings. Okay, that's weird. Yeah, this one is an old view, I think. So anyways, so I kind of I started off using NVIDIA and I'm on the hourly. Let me quickly zoom in. And this is kind of where I started with my drawings. In general, just like started at this point in time. And then I began with drawing my fib, starting at this low to this high as a starting point. And let me quickly extend it for the sake of the demonstration. And I see right here a retracement, but it didn't really reach my sweet spot, but I wanted to capture this example anyways because I couldn't find hammers. So I kind of hypothetically what I would do here if it retraced back down to the sweet spot and this was an actual hammer instead of an inverted hammer, I would choose it as an entry point. So this is one was just more of a hypothetical. I wouldn't pull the trigger on this. So if it was an actual hammer and it entered the sweet spot, I would consider it potential entry points. But so I'm going to move on from this one unless there are.
Now, it's okay to enter at the 23.6% retracement, right? Especially if it's the beginning of a move to up or downside, it doesn't matter. Like we said, the beginning of a move, it's okay to enter at 23.6 if you get your other signals, right? If you get the trigger signals, which are either formation of flag, a pennant, or you get a candlestick pattern that we've discussed, right? One of those three.
Yeah, I kind of had the railroad tracks right here. If it was the very last point, right? Would that be considered? Oops.
If you ask the question, is that considered the railroad tracks? Then the answer is no, right? So you have to be convinced.
Yeah.
Trading is about conviction. If you're not convinced, don't pull the trigger, right? So don't force it and say, oh, it looks good enough and I'm going to do it.
Yeah.
Right? And plus, that green bar has too much wick. No, the previous green bar where you said railroad tracks, like, there's too much wick to the both top side and bottom side of that bar.
Yeah.
To me, railroad tracks is really equal bodies, equal highs, equal lows, and the open and close is very, very near the top and the bottom.
Okay.
Otherwise, it looks like two crosses next to each other, not really railroad tracks.
Gotcha. Okay.
Yeah.
That makes sense.
Okay.
Yeah, I'm just going to delete this one.
Don't delete that one. You can remove the extension if you want, but don't delete that one because there's things I want to see once you go to the next entry.
Okay. I'll keep it. Okay. So then I kind of moved back from kind of considered a reversal here and switched my based on visual cues specifically, and switched over to the downside for this other next play since I'm on the hourly.
I think there's one part of the homework assignment you missed.
Which part?
Do not enter reversals.
Oh, okay.
Because remember that part of the training is really understanding using the fibs when a true reversal has taken place.
Okay.
It
Would you
worked out
consider
because you have hindsight.
Yeah.
But sometimes you have deeper pullbacks that are not truly pullbacks.
Yeah.
If
Okay.
if you take your mouse to the left, and I'll tell you to stop, right? Keep going to the left. Right up, you went too far. A little bit more. A little bit more. Right there. If you had thought that you have a higher low, I'm going to enter to the upside because you thought this was a reversal, it immediately told you that's not a reversal, right? The next
Yeah.
high said, I'm not going up, I'm going to continue to go down.
Yep.
That's the purpose I'm suggesting for now. Practice on continuations
Okay.
and not reversals.
Gotcha.
Reversals
Okay.
are some of the sexiest by theory, but the hardest to execute and make money on.
Got it.
Because
Okay.
it says, I know where the top is, I know where the bottom is.
Yeah, that's a good point. Okay.
real quick on that one, Beanie? I just wanted to. Would you consider that a reversal point or a continuation though? Because it made a couple of like valleys and before we get to that point, right? I was thinking, just looking at it from my education.
Yeah, so if you hide everything to the right, if you go like that, yes, you keep hiding, hide some more. Show until you have that circle that you've put in place. Yeah, right there. You can leave it right there. Yes, exactly. Perfect. No. Just stop. That's good. I like this. So right here, there's nothing that tells you this is a reversal, right? Yes, you have lower highs, so you can assume a reversal is coming. But your true indicator, the reason why I wanted you to leave that Fibonacci, the one that you extended first, that needs to go higher because it did not breach the 38.2, so it needs to keep going higher, right? And there's nothing on here that tells you it's breached. It's actually now at your sweet spot.
Yeah.
Right? So right now price has reached that sweet spot. But before you see everything to the right, your assumption is this is going to go up.
Yeah.
It's okay to be wrong, right?
Yep.
And this is where, when you're journaling your entries, every time you're wrong, you'll analyze it and you'll say, okay, I was wrong because of XYZ.
Mm-hmm.
But everything on this chart right now tells you I'm going to the upside.
Yeah.
Yes, you saw the downside. That's why you can easily say I'm going to pull the trigger here.
Mm-hmm.
Right? I want to teach you to see the chart as it happens, right? Live, not 2-3 days later.
Yeah. So if you see it in this case right here, after it breaches, I guess it enters the sweet spot up here. Yeah. Never mind.
Yeah, but so even before your circle,
Yeah.
that drop there, right there, that low, I would say, if I get a hammer right there, if I get railroad tracks, I'll take that trade because I'm in my, close to my sweet spot, right? I take that trade. I have a stop, and if I'm wrong, I exit my position. And the next day, now if you go one day to, right, so if that day you're saying, okay, I'm good, my position is making money, but I'm not hitting my target.
Yeah.
And then you see, oh, I'm struggling
Big
now,
bar. Yeah.
right? Then it comes back down. You probably have not taken any profit here because it hasn't moved enough, and you're exiting at a loss, and that which is okay,
Yeah.
right? And then when you see this big gap down, now you know, oh, let me be
Reverse.
concerned. And then now you see that 78.6 is breached. That's
Yeah.
where, that upside is done.
Yeah.
Now you can say, you've made me miss all this move. But you've only missed it because because you've seen it,
Yeah.
right? Prior to that, you have to make the decision why things are happening. Like you start combining other things, like support, resistance. If today we're gonna get into supply zone and demand zone. If there was
Yeah.
a supply zone where the peak happened, you might say, you know what, at this level now, if I see a lower high where you have that yellow circle, you say, I might take it to the downside. If you had given me that analysis and say, this is why I'm taking the downside, yes, I agree. But just because you see a lower low and
Yeah.
you've seen it actually make money, that's not the reason why you're going. Right? Make sense?
Yeah, that makes sense.
Yeah. Okay.
So then, to be fair on that, maybe we'll just do this.
But you have so many entries to the downside once you've breached that 78.6 because you get a lot of continuation. You get that consolidation.
Yeah.
Right after it breached that 78.6, you see that, not that one, the next one below, the next gap below it,
Which one?
to your left.
Oh, this one?
Yeah, that consolidation area. Once you
Yeah.
break that consolidation area, you have an entry.
Yeah.
Right? You have that upside down flag that just formed there. You have your
Yeah.
entry.
Yeah.
But you wouldn't even know to enter that, though, would you?
Why?
Because it hasn't. You don't have a new lower low yet until after that.
So let's zoom out
There's
and let's
actually
really
a
talk this through. Right? This is
a support
quite a
right here
good
too.
example.
Okay.
The other way. Zoom the other way.
So zoom in.
Yeah, zoom in. I always get these mixed up. Okay, so can you please delete the new fib, not the old one, the new one?
This one?
No, the other one. Yeah. Yeah. So, and then extend the other one. I think this is an important question and lesson. So where's 78.6?
Where breaches?
Yeah, no, where's the line?
Right
It's
there.
the line right there, right?
Yeah.
So when you breach that and price never goes back inside of that 78.6, that tells you I'm going down.
It
Right?
almost
Based on
acts
what
as the
we've learned so far, is until you breach 78.6, the previous trend is intact. When you breach it, you have a new trend.
yeah.
Right? You're not picking the top, but you're getting a confirmation that that trend is done. You get a
and you can
consolidation right around that zone, right? Between the 0%, the 100% and the 78.6%, you got that consolidation.
yeah.
As soon as you break that consolidation, you can enter. You're saying new lower low, which from where were you looking at new lower low? Because that consolidation area has a low, you're breaking that
Well,
low.
the previous low.
Where the fib started?
Yeah.
Yeah.
Because I
So
thought you have to, in order to redraw, yes, as soon as you breach the 78.6, right, there's a high potential that's going to keep going even lower because it's from a retracement perspective.
yeah.
But I thought in order to actually be able to redraw, you have to have a new lower low, right?
In a
Compared to
continuation, right? So right now, if you leave that fib as is, W, and then start a new fib from the top, and if you go to the bottom of that consolidation, that's your new fib. to continue this fib, right, to keep going down, you need a new low. But the previous fib, so the one trend, when that trend is broken, you need a new anchor points, which it gave you the high and it gave you a new low, right? So you do have anchor points. It's not like a straight line without any retracement. You got some retracement in there. So I want to make sure I address your question. So if it's not clear, let's
it's not
let me know.
100% clear. Yeah, I still not 100% clear to me because, yeah.
So your first fib is an upward trend.
Yeah.
You break that trend.
Mhm.
When you break that trend, you're saying, okay, now I'm going to go to the downside. So you have to flip your fib.
Mhm.
When you flip your fib, you don't need a new lower low from the previous trend.
No.
You start from the high, and now you find peaks and valleys. Right? That's what you're looking for, which you
Yeah.
have them, right? Along the way, you have them.
Yeah.
Right? So, why you need a newer low from this point is if you want to keep dragging this fib, you want to take it to the next low.
But then how would you enter? So if you keep the new fib, let's say we switched over to the new fib,
Yes.
and if you can move it back to that consolidation area real quick for the example. Yeah, so because then now you don't even have deep enough retracement. It's kind of between the, 0 and the 23.6.
Yeah.
So it's still it's for me, I guess it would be a little bit risky, right? Because you don't know. It might retrace further, and this is at the very beginning of the move. So how would you feel comfortable enough to take that move there?
Yes. So we're combining a lot of things together to make a decision. The first one is the previous trend. We have confirmed with the 78.6 level broken. We have confirmed that the previous trend is over. And we are now just at the area of that previous trend being broken. We're consolidating in that area. We're not going back into the zone. There is no bar that has closed above that 78.6. That gives me the comfort to say I'm in a new trend, and if I break this consolidation to the downside, I'm taking it. Right? So here are things where you're starting to put everything that you learned together. It's not just a single fib, or this one did not retrace enough. Yes, I'm not really looking for this retracement at this moment. I'm looking at the previous trend just got broken. I got that confirmation. I want to take this trade. And if you leave the fib where it was, like at the low, I think the next one is a little bit lower. No, not that. No. Within that consolidation zone, you have a lower point. No, the previous consolidation zone to the left.
Oh, up here?
Yes, right there. Yes. So if you take it there, now the next thing that I have not seen on this chart, W, is where do I exit? If I enter at this consolidation zone, right? It fits one of our 4 criteria, right? The consolidation is one of the 4 criteria to enter. So
Yeah.
as soon as I break the low, I'm entering there, right there. That's my entry. Where is my exit?
I would use the extension tool here to make an educated guess.
Yes, one, your even fib has to show you where is the negative 272. Right? So when you add that, it gives you, that's one area where you can exit. And then you use the extensions to say, hey, in the past, when price retraces this much, it has a tendency to reach this exit point, right? So when you start to add those, you have your exit.
Okay.
It's making sense now?
Yeah.
So you do have to combine everything that we've learned so far, right? So that support resistance is dynamic with Fibonacci, and when we're breaking support, price is going to continue to go down, unless there's something else that we will talk about in today's lesson where we say, hey, even though I just broke the trend, but there's a floor or a ceiling waiting for me, right? There's some support resistance that would potentially prevent me from going further. If you see that, then you don't take the trade. Otherwise, without having any conversation about that right now, just based on the tools we have so far, we broke the trend. We didn't come back inside that zone. We take the entry, right? We trade it.
Okay. So the exit would be here, right? You said the negative 272.
Yeah. Did it come? Did it? Your chart
Yeah.
should show it.
Yep. It came to it right here with the green bar.
Yeah. Yeah. So that's your first exit, and then the negative 618 would be your second exit.
Okay.
Yeah.
I don't have the 618 set up. Okay.
Yeah. And in addition to that, you do your extensions to kind of confirm, hey, can I, exit here?
Mm-hmm.
Okay.
Okay.
So that's why I said don't take reversals at tops and bottoms.
Yeah.
But you just saw by being patient, by confirming the trend, you just had a beautiful trade.
Yeah.
Right? It's not about picking every winner because it's not possible. It's about being comfortable to take the trade.
Yeah. Okay.
Yeah.
Makes sense. I'll let, I guess, Manny go since I've been hogging the.
No, it's okay. Let's look at this one.
This one? Okay.
Yeah.
Let me take this one away real quick. Okay. So this one, I was specifically looking for, I'm trying to remember what I did here. Let me bring it back first. See what I did.
Yeah, I think it's good to bring it back.
Yeah.
Yeah, you can take it to the next one. The next one.
Yeah,
lower.
I did breach it though. I guess that this is like a consolidation area, I would say, potentially to take it to the downside. But I'm still not convinced at this point that it's a full reversal. If I was to look at it like this way, right? Like you said earlier.
Yeah, I mean, because you have a lot of consolidation area. There's no reversal. Yeah. Yes.
Yeah. So I take to the next one. Yeah. Didn't take.
My question to you here: you skipped this trade because you did not go deep enough.
Yeah. Third retracement.
Which is perfectly fine. There's nothing wrong with making that decision. Just be prepared to miss some trades.
Okay.
Like I said, if that move has been big, skip it, because then you might be at the bottom of that trend. If not, if you feel comfortable that there's still room to the downside, then it's okay to take it. Again, that sweet spot is really a sweet spot. You can take a lot of trades and you'll understand why it's a sweet spot, because those work a lot better than the shallow retracements.
Okay. What would your gut have told you at this point for you specifically?
I think that it has not gone far enough. I would take this trade at that consolidation. Right? It comes back to 23.6. It consolidates. Take it.
Okay.
We'll add two things today. We'll add supply zone, demand zone, and gaps. The gap that you see right before that consolidation,
Yeah.
that gap there price did not bother to go past that gap, right? It kind of closed it about halfway when it consolidates, when it retraces and consolidates. It covers half of that gap. After that, so when you go to your right, where you have the consolidation up higher now, no, closer to 23.6.
Like this one?
Yes, right there. When you have that, when price retraces to 23.6 and is attempting to close a gap, it's not capable, then it goes down. That you can feel comfortable.
Okay. To take it to the downside here?
Yeah, take it to the downside. Even where you have your circle, you have your upside down hammer. That also makes sense taking it there.
Yeah.
Except, why did you take it there and not that consolidation? Because it's the same scenario, right? Same scenario plays out in both instances.
Yeah. Same methodology. Yeah, that makes sense. I was just excited to see an inverse hammer. So I was like, this one, I'm going to make it happen. Okay. Yeah. I did some on Amazon as well, but I think this is, that was a good lesson.
Yeah. No, that's a good trade, right? And how far it went, it didn't go that far, but that's still a good trade.
Yeah. Quickly, how do you do the trace? How do you trace the price movement again? You always do it on your.
What do you mean?
Like you have like an easy way of like putting down 2 points. It tells you like what the price movement is.
On your left side, you have a ruler.
Oh, okay.
Yeah, and then pick top and bottom.
Gotcha. So if I would have entered like at this point here.
Yeah.
Yeah. Okay. I see. Okay.
Yeah.
Nice.
I tried to pick something a little different this week because I know we do a lot of tech stocks. So pick Lululemon just to kind of change it up a little bit and to try the new tools out on one of the stocks we haven't seen before previously. So I drew my fib right here on the downside, and then let me actually click the fib so we can see it. So this would be the fib on the downside, and let me move it back because I started here. So this is kind of how I started, and then you see this move right here. The first one is fairly shallow, so I didn't feel comfortable enough taking it. So I just moved my my fib, and then this one right here, I felt pretty comfortable because you get a nice retracement. It's not perfect in the green to green zone, but it's good enough. It goes past the 28.6. So felt fairly comfortable. And then right here, you got a nice engulfing candles right here. So I felt fairly comfortable. And then next I would enter right here, right below the engulfing candle. This is
okay. So let me I need to have a little timeout here. The new bar has to engulf the previous bar, not the other way around.
Oh, okay. I thought either way works.
It worked in this instance, but when the engulfing is on the previous bar, it just says the new bar has some indecision. It doesn't know what to do.
Got it. Okay.
Sometimes that is called an inside bar, and we're not going to trade that, but an inside bar, when it breaks on either side, you can take a trade. Like if it breaks to the upside, you take it to the upside. If it breaks to the downside, you take it to the downside. But let's not worry about inside bars. Let's just strictly focus on engulfing is the new bar, right? Not the old bar, but as an idea, this is good.
Okay. Yeah. So with that idea, I would enter right here, and then get a little bit of stuff here. But on this move right here, I use my extension tool. Kind of lined up nicely actually with negative 272. So right here, I would exit or a little bit above it, depending if I feel confident enough. It's kind of the end of the day, so I might take some off right here, right when I reach my first extension trigger, and then the next morning, probably take the next day, take the rest of it out, and then maybe let some small percent, like 10-20% ride for this next move right here.
As an experience, I'll tell you what's going to happen. First few times you lose real money, you'll take your exit very quick. You'll say it's end of day, I don't want to wait until tomorrow. I'm going to take 100% of my exits right now. Right? That's guaranteed you're going to do that. That's part of the learning.
Especially with this indecision right here.
Yeah.
Because you get a nice little dip and then you get like a little spike. So you probably I'll probably cash out right here.
Definitely. You see consolidation, you have fear kicking in, so you'll exit. But eventually, if you really journal your trades, you're not gonna have fear, right? All your trades are well maintained, like your risk exposure is well defined, and you just take those trades and you let it play out.
Okay. I just gotta delete not the fib, but just these lines to make it a little easier to see. Then I move to the next point, and just move my fib to the next little point. So right here, you got a little retracement right here, but again, this doesn't really fit any of our criterias, so I just kind of skipped it. It's not a consolidation. It's
not even draw it. Move my fib to that level, because to me that whole thing is about equal.
Yeah, right? It's like a tiny bit lower. Yeah.
Yes, but so it's about equal, and I would treat this whole thing. Actually, I would treat this whole thing as consolidation, and a break of that consolidation, you enter it.
Right here. Yeah.
When that gap down.
Yeah.
That bar there. No, the first bar that gaps down.
This one?
Yeah, that bar. No, not that one, but the next one after that is what breaks the consolidation area.
This one?
Yes.
Got it. Yeah.
Yeah.
Yeah. That would make sense.
That's the one that breaks the consolidation.
Yeah. I guess here you said obviously this is not an engulfing. Because of the structure, these have to be flipped, so I guess that would make sense. Yeah, the next entry point would be a consolidation for all of this.
Yes.
Okay, nice. So I kept moving my fib. Again, nothing really gives me a nice enough retracement for me, at least, to feel comfortable. So I just kept moving it. Nothing. Again, I didn't see any major retracement. This was, I guess, a nice one right here. Now that after discussing it with, from Neb's homework, I guess I could take this as a consolidation zone and enter right here for a nice little move. Again, for me, I just didn't feel comfortable enough because when I look at the retracement, it wasn't deep enough for me to pull the trigger. So I kind of left my fib here, and then I left this moved it down a little bit. Continued to move it down again. Nothing really pulls back to where I wanted to. Keep moving it, and then this right here. After this move, you get a nice retracement, consolidation a lot around this area, and then actually a gap up. So if I had taken this move, I would have probably lost some money right here.
Why would you lose some money? Explain to me.
So if I had kind of played this consolidation to go down.
Yeah, but where's your trigger? Show me a trigger for that consolidation.
Yeah, I guess I would never even enter. So
you have no entry, right? Because
you have no entry because it never reached. Yeah, it would be like a little bit below this consolidation zone, kind of like this. Yes. Okay. Yeah, I would never actually. You're right. Actually, I think I thought about that, which is why I skipped it, and then I decided to enter right here.
So tell me the rule for entry for right there.
I think in my mind, I kind of considered this an engulfing one. But I think this same thing applies here.
Okay.
So the previous rule that we talked about, it doesn't work out anyway. So I guess that rule is a good rule to follow, because immediately you would definitely lose money on this, because you would enter something like right here, and then for one day it might look good, but then immediately it reverses.
But how far does it reverse? If you keep going to the right,
not too long, I guess.
it made money, right? Because your stop would be at the high of that big green bar.
That's true. This would be my stop right here, a little above
somewhere
it.
above there.
Yeah. So
you
if I
stop, always remember, you stop, you have to give it a wiggle room, so it's not a penny above, right? It's just, it could be 50 cents, it could be $1, depending on the stock.
Yeah.
Like a $300 stock, it might even be $5.
Yeah, it could be like right here a little bit.
Yeah,
Yeah, that makes sense. I think that makes sense. In my mind, I kind of try to put myself in this position as well. Like, what would I do? Like, the day passes, 2 days, 3 days, it kind of goes up a little bit. Like, so you start to kind of lose a little bit of money, and then personally,
then you let fear take control.
Yeah, I would let fear take control. So that's why it's like,
yes, fear should not take control. Both fear and greed should not be in charge.
Yeah.
Right? Mechanics should be in charge. You have set of rules, you pull the trigger based on those rules. Fear and greed do not rule those boundaries that you've put in place. You let the trade exit you out if it's not going to work out.
Yeah, makes sense. So this is the second example. Let me delete this real quick just so we can move on from this one. Another point, though, is another entry point. And this one, again, you see this move, it gaps down, and then it retraces a little bit. And I just saw this, that it was, end of the day on a Wednesday, an inverse hammer on a downward move. So I just wanted to call this out as a potential entry point. Maybe not the best one, because my rule earlier that, I don't feel comfortable if it doesn't retrace at least a little bit above the 23.6 doesn't apply. But since it was an inverse hammer, I just wanted to show it as a good example of the potential entry point right here. And then my risk will also be pretty small on this, because, this is essentially my risk, and my stop loss would be right here. So I would exit at doubling this amount, which would be somewhere right around here. So I would actually probably have exited way before it reverses to the upside here.
Yeah, the thing about this 23.6 retracement, that 23.6 has already happened on the left side. Way to the left, right? So you don't have a new anchor to draw from. So that move now is based on the 38.2 retracement, consolidation, and you break that consolidation and you're taking that entry. Not there, but you've taken it somewhere to the left, somewhere up there. When you have that consolidation area, that's where you have taken it. The second place is almost like chasing, because it's, again, kind of consolidating, and it's not really retracing. It's not giving you a nice place to enter, but it's based on your analysis, it's not wrong. I'm just telling you, it's like you're now in a downtrend, having a rally, and that rally has not made a new low, and you want to take a trade, right? So it could be that this the low is already there, and it doesn't make a new low. This is not a true continuation, right? That's what I'm trying to say.
Yeah, I think I agree with that. I just saw the inverse hammer, so at least I wanted to call out one example that had it.
Okay.
Let's delete this real quick. The next one right here, again, I'm still kind of operating under the same fib, right? Because it still hasn't made a new low yet. So we're still bouncing around between the 38.2 and the 23.6. So with that in mind, we have a couple of moves right here. Again, based off your analysis that you would have entered here at this consolidation zone, and then we're kind of still doing some highs and lows. I guess this wouldn't necessarily make sense yet because, again, this is a lot of indecision right here, this whole area. But if I were to move forward, this actually would be a correct engulfing example. So you have the green and then the red engulfing it on the way down, which is how you would want it to represent an engulfing entry point. So you'd enter right here the next day, and then for this move right here.
Yeah, so I think this is, let me show you guys something. I think this is a good place to kind of end for today, but Nabio, before you leave, let me show you guys one thing.
Okay.
I want you to really spend some time really trading trends versus trying to trend this range bound markets. That's in your example, that's what you were showing. Is it went up, retraced to 38.2, came back down close to 0, and then went back up to 23.6. So that kind of bouncing around is really not something that I recommend you do to trade, right? So it comes to 50%, comes back down to 23, 50, 23. It's playing within this range. You can even use this as your dynamic support resistance. So between these ranges, I'll play it up and down. But then, if you have missed this move here, 1, 2, 3, 4, 5, 6 times, and then you say, hey, let me do it again. So 7 times, that becomes a loser. Right? If you haven't seen it early enough, and you're taking a trade too late, that's a loser. That's why I don't recommend that you do the range bounds. Really, for now, focus on those real retracements. Once price has retraced to 50%, the second time it comes to that 50%, don't worry about taking it, right? This is now you have a new trend that's about to form. It has retraced, you took this trade, now it's in a range bound. Let's just leave that one alone, because those even range bounds are as hard to trade as reversals for now.
Okay.
So that I really wanted you to understand that piece is if you don't see a trade. So if you want to trade daily and Lululemon doesn't give you a trade, something else is going to give you a trade. And if you understand the setup, and all you have to do is 5, maybe 10 tickers, you'll get a trade in that ticker. Especially if you focus on SPYs and Qs and IWM, just these 3 alone will give you trades on a daily basis. Right? So you don't have to force any entry. What you want to do is, do I have a sweet spot? I have a zone, I have a consolidation, it breaks that consolidation. Yes, there's a gap, so you can decide to take the gap or not. If there's a gap, boom, I take it to the upside. Look where I hit. 1, 2, 3. Almost my third exit up here. I'm hitting. Right? That's what you want to focus on. Really, it's not. We should not try to make it complicated. We should really simplify it. We should really simplify it. We get to this 50% consolidation. We take to the downside. It doesn't go all the way down. We get another consolidation and it breaks to the upside. We exit this trade. We exit this trade for very, very small profit, right? Because we never know the bottom, right? We want to let it play out. So we entered here, and we're going to exit. This consolidation area breaks, we exit here. So very little profit, but that's okay. That's the goal is, hey, within my trade setup, this makes sense. I'm going to enter. When it's outside of my criteria, I'm going to leave it alone. We don't chase, we just find the next setup. But as homework, it's fine to do what you've done because we just keep looking at it. And start to identify gaps. right? Try to identify gaps because, if you remember, a few weeks ago, I've already said when we hit this gap, it could act as resistance, right? It took us a while to get there, but we got here. We closed this gap 100%, and then what did we do? We immediately collapsed. As soon as that gap was fully closed, price collapsed. And this is not a hindsight conversation, right? A few times I said when we get here, we have a chance of collapsing. This is how you start to think about your trades. It's not about, hey, what did I just miss? Is what can I anticipate? And when I get the signals, right, you get this consolidation area, it breaks below it. So my entry is here because we got down, and I am not worried about this heat because my wrong exit is up here. So I wasn't worried about this. So this is a very, very nice move. And was that entry satisfactory based on, I want to make two I want to make two for every one risk, right? So my exit is somewhere down here. So I'm okay holding this position. I'm not too worried about it.
And you're not even scaling out at all?
I don't have any exit criteria.
Yeah.
Right. My exit criteria right now, I didn't draw it, is somewhere in this area is my exit criteria. But I think we're gonna hit this somewhere in this area for my scaling out.
Because of the gap?
Well, the gap is down here. This is where I want to see it, but I see a few times where it's struggling, it's consolidating here, it's struggling to go below it here. So here it kind of almost touched it. So I'm thinking that we could struggle in this area.
Because it's almost like a support
Yeah,
at that
it's
point.
almost like a support.
Why didn't you think the other one was the support instead of that one, I guess?
Sorry?
The other two kind of like consolidation areas. Why didn't you think the bottom of that would be the support?
This one here?
Yeah. Because I would think the first closest support.
So remember, my support and resistances are dynamic, right? I use a fib for my support and resistance. But once I get into a trade, I want to see where would price really struggle. This is the only one time that it came here, right? It hasn't shown me, hey, I'm going to really struggle here, but I'm going to struggle down here. So, plus when you're in a trade, here's one trick you use. When you're in a trade and you have consecutive bars going in your favor, you can kind of let it play out those support areas, right? If you had said, even if you said it's not dynamic, this is support for you, you let it play out, and if you say, you know what, I closed below it and then I closed above it, I'm going to exit, you would be 100% right. Right? There's nothing wrong with taking profits, but sometimes you'll accept losing some because you want significant moves. Right? You want significant enough moves, and then it's okay. Part of the reason why I'm a little bit cautious is we've had this big up move. Yes, we're part of a downtrend. We've broken the 78.6. So as a rule, once we broke it, we could be to the upside. The problem I have with that is we broke it, but we came back down inside it. So I'm not really comfortable. We broke it again and we came back down inside it. So I am viewing as that box that I showed you earlier, that consolidation area, I'm viewing this as that consolidation area. This box here.
Where's your fib drawn from exactly? Where are the 2 points?
It's on the
So
left.
I have a fib from
downward.
here to here going to the downside.
Okay, and then you have another one. Is just a monthly, the other one, or?
Oh,
what's
this
the
one
other?
is the monthly one, right? The monthly one from a long time ago.
And
this
then
one.
what about the other one?
This one here.
Oh, I see. On the upside. Okay.
Yeah, this one I just haven't. We didn't clear it, so I haven't moved it here yet.
So
Okay.
why would you draw that though? Based off our rules, you wouldn't draw that, right? Not yet, at least. Maybe.
No. So this is
you may have
broken.
learned.
Even though it keeps bouncing back and forth, I just want to see.
Okay.
Right? Like sometimes, like I'm anticipating, right? I'm seeing. I saw this as an area where price could go down, and I was happy to take this trade. But I'm still seeing, hey, am I gonna keep going down, test some 61.8, which kind of aligns with this box that I drew. So I want to take some exit here. I really want to let this play out. I don't think we're out of the woods yet.
You think it's gonna keep going down?
I think so. We might get a small bounce in the morning. And I think eventually we're gonna close this gap. I will take some profit off here, but eventually we're gonna close this gap. So part of the reason why in this fib, right, I'm not going to that negative 272, right? I don't want to go all the way down. Like the negative 272 would be taking it to the upside, but that negative 272 for this move, like for me, that move is over. So there's conflicting things happening right now. Yes, it looks like I'm in an up move, but that up move is very, very weak. And anything could happen in the market. So because of that conflict, I'm taking trades a little bit sooner, but I don't have any, like none of my fibs are telling me, hey, it's time to exit. This one is telling me I should play to the upside. This one is telling me I should stop playing it to the downside. I'm still taking a downside. But that happens when you start to understand some of the other things we're going to put in place, like supply zone, demand zone, and gaps. Really start to think about gaps. Let's talk about gaps next week. Start to think about gaps and identify a few gaps, and then, don't worry about entries or exits. I just want you to identify gaps. And if you want, you can use this tool. There's this, maybe it's not here, maybe it's here. Yes, this parallel channel tool. That's what I use for my gaps. So once I take it and I have a perfect line, I drop it to whichever side I want. Right? And I identify that gap. So just draw those, a few of those, and then we will understand what they mean in a subsequent session.
Okay. Sounds good.
I have too many drawings.
Was there any news today? I think Manny said it was a CPI. Any news that could have sparked the downturn the past 2 days?
I wasn't paying attention to the market today, really, so I don't know what drove it. All I know is, the Friday position is what I'm counting on to kind of be a sweet spot.
Yeah. Okay.
What are your thoughts on just in general, just trading on in December? Because I know it's kind of a volatile month normally because of all the selling that's happening for tax thing.
It doesn't really matter because
Mm.
the tax selling, I don't believe it has enough volume to really sway the market one way or another.
Mm.
And I'll tell you a good tax loophole. So if you sell SPY, you cannot buy it back, right? In 30 days,
Mm.
you cannot buy it back for the tax purposes. But you can sell SPY and buy VTI, which is the same thing as SPY. So no matter how much you lost on SPY by buying VTI, the selling did not change your position,
Mm.
but it saved you taxes.
And what's
And
VTI again?
it's the same. So SPY is Spiders, VTI is Vanguard.
Oh, I see.
So Vanguard total stock market. They track about the same stocks.
Mm.
So that's how you trick the system.
Oh, it's very,
But you know,
very good tip for sure.
sorry.
No, it's a very good tip for sure.
Yeah, but you know, if your portfolio is 10,000 or 10 million, it makes a big difference whether you use this tip or not.
Yeah.
Yeah,
Yeah.
definitely.
Yeah.
I'm about to sell for tax purposes for BCTX.
You must have a lot then.
Yeah, let's see when it's they have like a poster presentation. Should be in the next few days. So after that, I'm gonna sell it.